Capital flows are beginning to shift. We had been expecting 2026 to be a year of escalation in the international war cycle based on cyclical models that were published back in 2021. It's entirely possible for long-term models to pick up trends, years in advance because everything does ultimately go to a cycle. Martin Armstrong has proven that beyond a shadow of a doubt through his work. So the Iran situation, very much on time from an escalation standpoint. Um, Capital flows at the onset of war tend to move from private sector assets like the stock market more towards treasuries, and that's a traditional flight to safety kind of a move. And then in the dollar, you're seeing the dollar picking up momentum to the upside as well, which is normal when either the economy is in trouble and or the cycle of war is increasing. Um, so some of the economic news is of late with rising unemployment, somewhat of a surprise to the markets, but that's another area the cyclical models were showing we would see significant change this year. We started 2026 at 4.3. Cyclical miles project will be near 7% by the end of calendar year 26. And very little of that appears to be related to AI. It is the standard operating procedure of Fortune 500 companies to lay off workers to protect the profit and the bottom line. So far in the new year, things look very interesting, and look for continued shifts in confidence impacting all these very important markets. Thanks for listening.